In this video, I'm going to show you step by step my new multi-airdrop qualifying route. Now, before I get into this, just a quick disclaimer. This is, again, a max degen route. I'm going to be using leverage. I'm going to be depositing into a bunch of different DeFi apps, bridging to a bunch of different chains, and interacting with a bunch of different protocols. And so, of course, every time that I do one of these things, it's going to increase the levels of smart contract risk and liquidation risk. So please do your own research before following along with something like this. Anyways, I did think it was time to drop a new massive multi-airdrop strategy because it's been a couple of months since my last one dropped. And of course, things have changed a bit since then. And in this strategy, I'm going to focus on a few different things that I did not include in the last one. And of course, the quality or tier level of airdrops is subjective, but what I'm going to try to do with this strategy is to hit as many high tier airdrop targets as I can that still have time to be farmed. So for example, in this strategy, I'm going to not bridge to ZK Sync and do anything there because I feel like the snapshot has probably already occurred. And in case you're wondering what this is that you're looking at, this is a new app that I've been working on to help track airdrops, to get information about projects, but to also actually provide time-sensitive alpha to allow you to track your own projects in a customizable list, to track your points, to have a calendar where you can track airdrop dates and claims and eligibility checkers and everything that you need all in one place. Anyways, let's jump right into the strategy. So I am starting with some ETH on Arbitrum. I have about 0.53 ETH, and this is what I'm going to be using to complete this strategy. I feel like this is a reasonable amount of money to use. If you're going to try and follow along with a significantly smaller amount of capital, you might have to skip a few of the steps, especially the ones that require locking up funds or using leverage. And on the other hand, if you're planning on using significantly more capital than this, then just make sure that you're getting the best rates possible whenever you make swaps and to avoid slippage, because when you use more capital, you have a higher risk of losing money in slippage. So the first step that I'm going to do is to swap the ETH that I have on Arbitrum to USDC on Arbitrum. And this is already going to hit the first airdrop, which is Jumper/LiFi. So let's go ahead and make this swap. And I'm going to use Jumper for a few of the transactions in this video because honestly, I'm a big fan of this platform, and I think that this is going to be a solid airdrop farm. Okay, the first step is done. Now I'm going to take my USDC tokens and I'm going to bridge them to Aptos using the Liquid Swap bridge. So this is airdrops 2 and 3. Liquid Swap or Pontum network, and then Layer 0. This bridge obviously integrates with the Layer 0 protocol, which has said that they've done snapshot 1 of potentially multiple, so there could be more rounds of a Layer 0 airdrop. And then the Pontum network has their own airdrop campaign on right now. And then once we get to Aptos, of course, there's going to be multiple additional rounds of the APT token airdrop because they've allocated a massive amount of supply and they still have something like 46% of the token supply yet to be dropped. So I'm going to bridge the full amount of USDC that I have on Arbitrum to Aptos. Now, I already have an Aptos wallet set up with some APT tokens in it, and that is the gas token on the Aptos network. So if you've never actually interacted with Aptos, you're going to need to first install a wallet. I'm using the Pontum wallet, which is a solid one. I do recommend it. And you're going to need to get some APT tokens. There's a couple ways you can do this. For starters, you can buy on an exchange like Binance and then send it to your wallet. Or if you are using a bridge like this, you can actually select this option down here, gas on destination, click add, and then you can select how much you want to add. And so if you select this option, it will take a small amount of ETH out of your wallet in order to give you a small amount of the APT token. But this should be more than enough to get you started. And then once you've got the USDC on the Aptos network, you can use this 0.1 APT to swap some USDC into other things and then continue interacting with it. So let's go ahead and do that. I'll send 0.1 APT even though I don't actually need to, and then transfer the USDC. And this is going to cost me $1.36 to bridge the token over, and then 1 cent in gas fees. So let's go ahead and confirm that transaction. Now, when you make the bridge transaction, it might take up to 5 minutes, so I'll come back when this goes through and we'll continue with the next step. All right, that transaction went through, and so now I have my 1,547 USDC on the Aptos network. Now, Liquid Swap, which is the bridge that we just used, is integrated with the Pontum network, and they have a point system as well. You can see the points that you have by clicking on the dashboard here. And if you haven't already, you need to sign up for the airdrop. And once you do that, you'll be accumulating points for all of the stuff that you do with LiquidSwap. Now, they are not just a bridge, but they're also a decentralized exchange for Aptos. So you can swap tokens, you can actually add liquidity as well and earn yield. Now, for the next step of this, if you just bridged USDC and then got the extra small amount of gas, you might need to swap into a little bit more APT. So you can do that actually right here. So I will go ahead and swap 25 USDC into some APT. I do want to keep the majority of my capital together because I have other plans for it, but having a little bit of extra APT is just going to help me do all the stuff that I wanted to do. All right, so the next step is I'm going to go over to Aries Market. Now, this is a DeFi platform on the Aptos network. They also have a point system on, and they're also going to be having an airdrop. So now we've got the Aptos network, we've got LiquidSwap, and we've got Aries Market. And what I'm going to do here is I'm going to deposit all of the USDC that I just bridged to Aries Market. This is a lending and borrowing platform, so you can actually add collateral with certain assets and then borrow against the value of that. So I'm going to select ZUSDC, which is the layer 0 bridged USDC coin, which is what I have in my wallet, and I'm going to deposit the full amount. Now, depositing a sizable amount like this is actually quite good because it's going to help me level up for this airdrop, and it's actually going to earn me a yield on the deposit of 14% per year. Well, currently 14%, that is a variable rate, and it will depend on the supply and borrow demand on this platform. Now, I've already started using Aries Market, so I also have on deposit 12.47 staked Aptos tokens. But yeah, so now in my dashboard here, I can see I have on deposit with Aries Market about $1,630, and I can use that as collateral to borrow other assets. So let's go back to the lending tab here and check out the borrows. Now, definitely important to take a look at the borrow APY of the different assets. Some have much higher borrow APYs than others. And also something to consider when choosing which assets to lend and borrow is whether or not they're correlated or they're variable. So if you lend and borrow correlated assets like USDC and USDT, there is a much lower risk of liquidation because those move in price at approximately the same rate. They're both supposed to be worth $1. And this will be the case unless there's a depegging event, some sort of black swan event. But let's say, for example, I borrowed ETH or Aptos against the USDC that I've just deposited. Well, these are variable assets because they will not move in price at the same rate. And so there is a higher risk of liquidation here because if I'm depositing a stable coin and then the value of ETH or Aptos goes way up after I've borrowed it, then the value of my collateral relative to the value of my loan is going down, and that could trigger liquidation. And then on the flip side of that, if you deposit Aptos or ETH and then borrow a stable coin, if the price of the variable asset goes way down, then you can get liquidated. So that is something to keep in mind here. Now, what I'm going to do just to play it safe here is to try and borrow some USDT against the USDC that I deposited. So if I click on the asset, I can go over here, click on the borrow button, and it will show me how much I can technically borrow. Now, the theoretical max that it will allow me to borrow is 1,200 USDT. But if I do that, I'm going to be having a loan to value ratio that is in the red zone, or that could potentially be at a higher risk of liquidation. And so even though both of these assets are correlated, they're both stable coins, it's definitely smart to play it safe and to make sure that you have an additional margin of error or wiggle room so that if there is some sort of depeg event, you're at a lower risk of liquidation. Now, if I scroll down here, I can see that the maximum loan to value ratio that it will allow me to do on this platform is 80% for these two assets. So I can borrow 80% of the value of the USDC that I deposited, and the liquidation threshold is at 85%. So if I slide this bar all the way to the right here, then basically I'm borrowing at 80%, and there's just a 5% margin of error until a liquidation is triggered. But if I slide the bar back a little bit, even just to 90%, let's say, then I'm leaving myself with 15% wiggle room before liquidation is triggered, which is a much safer position. And obviously, the further to the left we go, the safer it is. And so what I will say here is if you're trying to follow along with this, make sure that you understand the risks and then choose your loan to value ratio based on your risk tolerance. how degen you want to be. And in case you're wondering at this point, later in this video, I'm going to be adding one more layer of leverage on an additional platform. So keep that in mind. Anyways, I'm going to borrow 90% of the theoretical max, which is actually going to be 70% of the value of the collateral that I've deposited here. So let's go ahead and click borrow. So now that transaction is complete, I have the USDT in my wallet, and the overall health of my account here is at kind of a higher risk factor. Now, since these are both correlated assets, they're both stable coins, theoretically this should be fine, although of course I never know what could happen, and if there is a depegging event between these two assets, a liquidation could be triggered. Now, I do have a little bit of extra APT in my wallet, so I suppose I could deposit some of that onto the platform here, which would marginally increase the health of my position here. So I might as well just go ahead and do that. Okay, there we go. My risk factor is now below the 80% mark, which feels a little bit better. All right, now that is all that I'm going to do on Aptos. I thought about adding Amnes Finance and doing some staked Aptos stuff. However, I wanted to actually preserve the capital that I have left for the future steps in this video. However, if you wanted to focus more on the Aptos ecosystem, then staking some APT tokens with Amnes is also a solid step. But for me personally, I'm gonna go over to a different bridge, the Aptos bridge, and now I'm gonna bridge that USDT out to a different ecosystem. So when I'm bridging out USDT, these are my options, and I guess I'll go to the Polygon network, which is probably going to be the cheapest option. Okay, so my 1,100 USDT is now on the Polygon network, but it is not going to stay there. So I am first going to swap it into wrapped ETH, and then I'm going to bridge it over to Mantle. And actually, in this case, I can route my swap through the Odos DEX, and that is also tokenless, so this is a multi-airdrop qualifier. So let's go ahead and make this swap here. Okay, that was successful. Looks like I actually didn't take much slippage at all on the swap, which is great. And now I can take my ETH over to Orbiter Finance and bridge it to Mantle. So this is yet another airdrop target that I'm hitting here. I've kind of lost count, but I'll add it all up at the end and we'll count the actual number of airdrops. I think it should be around 20 again. Okay, so let's ship the ETH off from Polygon to Mantle. And the good thing about Orbiter Finance is that they have pretty cheap bridging to Mantle, so this is not going to deplete my capital too much at all. Now, I have ETH on Mantle, and what I'm actually planning to do is to do some trading on IntentX. This is a relatively new perp DEX, and it's live on Mantle. And what I want to try and do is hit $5,000 in trading volume, because there's a Galaxy Quest on right now for IntentX, where if you hit that, you get to mint an NFT. So yeah, it's right down here. And if I trade 5K in one single day on IntentX, then I'll get to mint this final NFT for the IntentX Galaxy campaign. Now, if you're watching this video and the Galaxy Quest for IntentX has completed, it's still actually fine to do this because IntentX has a point system on where you can earn a share of the airdrop for trading volume. And of course, as with any other perp DEX, the more you trade, the bigger the airdrop. Now, the interesting thing about using IntentX as an airdrop farm is that it's a multi-airdrop qualifier already, because they want you to deposit as collateral USDE from Ethena, which is their synthetic stablecoin. But by holding USDE on the Mantle network, or by using it in Mantle apps like IntentX, you're earning sats for the Ethena Finance airdrop campaign as well. And then the Mantle network has already dropped a token, and they've had one round of an airdrop campaign, but they have also suggested that there could be future rounds. So this is potentially a 3-for-1 airdrop qualifier, with the high priority ones being Ethena Finance and IntentX, the perp DEX, and then the lower priority, maybe potential future airdrop qualifier for more Mantle or MNT tokens. So in order to actually use this platform, I need to get some USDE tokens, and I just bridged wrapped ETH. And also another thing I should say is that the gas token on the Mantle network is the MNT token. It's not ETH. Now, if you've never used the Mantle network before, then you will need to get at least a small amount of MNT to pay for transactions. Even just having 1 MNT or 2 MNT should be more than enough to cover you. Now, in my opinion, one of the best ways to get a small amount of MNT on the Mantle network, if you don't already have it, is to use layer0.gas.zip. This is going to route another transaction through layer 0, which we've already been farming in this video. And you can use this application to get up to 10 MNT tokens, which is way more than you need on the Mantle network. All you need to do is just select which network you want to send the assets from, and then you want to make sure that you click the checkbox here for Mantle, and choose how many MNT tokens you want to receive. So let's say I wanted to use the Polygon network to send some assets, and I just want to receive 1 MNT to pay for gas. So I'll just set it up like this. Make sure you select the correct network here, and then click the send button and confirm the transaction in your wallet. So for $1.50, I can get enough to pay for transactions on the Mantle network. So now that we've got some MNT tokens to pay for gas and the wrapped ETH on Mantle, we need to swap that into USDE so we can take it over to IntentX, deposit it, and make a couple of trades. Now, the main source of liquidity for USDE on Mantle is the Merchant Mo DEX. However, they actually already have a token, and we can use the Odos DEX, which is kind of a DEX aggregator, to make this swap. So at least we're hitting another airdrop qualifying transaction with this swap here. So I can swap my wrapped ETH into USDE using Odos. It's going to be routing the swap to USDE through Merchant Mo anyways, but at least I'm still getting an airdrop transaction out of this. So let's go ahead and make the swap here. And this is a situation where I would love if Jumper integrated the Mantle network, because I probably could have made this swap on Jumper, routing through Odos, routing through Merchant Mo, which would have added yet another airdrop to this airdrop Lego stack here. And with every transaction, if I can maximize my airdrop surface area, that is obviously ideal. Anyways, looks like that transaction went through. So now I have some USDE, and this is going to start qualifying me for the Athena Finance campaign. So I'm gonna take that over to IntentX here. And if you click up at the top here, you can click on the deposit button. It will bring you to this right here, where you can actually deposit the assets and then start trading with them. So let's go ahead and make the deposit. I'm gonna put the full amount onto IntentX for now, and this is going to make it easier for me to hit that $5,000 in trading volume, because I'll have to use less leverage per trade in order to actually hit it. Okay, well, this is quite frustrating to me because it's not actually allowing me to make this deposit with any amount that I select for some reason. So I may actually have to skip this step here. Yeah, okay, the transaction keeps failing. So I guess I'd have to go into their Discord and see what's going on and why I keep getting the error here, because I have no idea why it's not working. Anyways, if you're following along with this, theoretically, I would make the deposit here, make some trades, move some volume on IntentX, and then withdraw from the platform and continue. Now, one thing to note is that there is a 12-hour lockup window on the withdrawal period. So if you're making a deposit onto this platform, make sure that you don't need those funds for at least 12 hours. It theoretically should not be a problem, and there's actually nothing wrong with splitting up this airdrop route over the course of a couple of days. There's no need to jam it all into a 12-hour window, for example. Anyways, I guess I'm gonna have to skip this step of the airdrop route because it is just not allowing me to make a deposit of any amount of USDE for some reason. Anyways, my plan was to move a bunch of volume, try to hit at least 5K. Well, that would be easy, like one trade on 5X leverage, for example. So maybe even 10K or 50K, and then to leave a smaller amount on the platform, like 100 USDE, which would continue earning sats for the Athena Finance campaign, and then bring the rest off and bridge it out. But since it's not allowing me to deposit anything at all, I'm going to go over to Init Capital, where I've already got some USDE on deposit. I'm just gonna add a little bit to this position and then bridge the rest out. So I'm just going to deposit enough to bring the total amount of USDE that I have on deposit on Init Capital up to 1,500. Init Capital is another airdrop target on the Mantle L2. They also have a point system live, and the Init token will be dropping at some point over the next couple of months. So you can do this if you want to, or you can skip this step altogether. I already had some USDE on this platform, so I just added a little bit to it, but honestly, I would rather have left that on IntentX and kept trading with it over time. So I think this is actually the better play for that. Anyways, now I'm gonna swap my USDE back into ETH and bridge it over to the next network. All right, so I've got my wrapped ETH and I'm going to now bridge it over to Linea. So in order to continue increasing my airdrop surface area, I'm going to use the Al2 Finance bridge. And I'm going to Linea because they have an airdrop campaign on right now that incentivizes TVL, or the amount of assets that you hold on the network. Now, if you haven't yet signed up for the Linea Surge, then you should go ahead and connect a wallet, sign a message here, and you can start earning LXPL, which is experience points for the liquidity surge, which is this campaign they've got on right now. But I'm getting ahead of myself, so let me first send this transaction over. All right, so we've added the Al2 bridge to the list of airdrops hit here, and we're about to add Linea. So as soon as you sign up for the Linea Voyage surge and you've actually bridged some assets to the network, you are already going to start earning LXPL. Now, in order to actually maximize this, I'm going to actually do another loop of leverage here on the Linea L2. And I'm going to be doing this with KelpDAO's restaked ETH. So Kelp's liquid restaked ETH is already natively enabled to mint on the Linea L2. You can select the network from the list up here. And this is 2 more airdrops that we're adding to the list here. So we have the KelpDAO airdrop itself, and then of course we have the EigenLayer airdrop. Now I already have a bunch of Kelp ETH on the mode L2, which looks like it actually hasn't started earning points yet in the dashboard here. In the Kelp Discord though, they've already said that all of the networks enabled for minting here on the restaking platform are earning points in the background, but they're still working on enabling the points to show up here in this dashboard. So if you're following along with this, you restake some ETH and you don't see your points ticking up immediately, that is why. So let's go ahead and keep this train rolling. I'm going to do almost the full amount what I have here. So I already had a little bit of ETH, it looks like, on the Linea network. So let's go ahead and restake 0.34 ETH for KelpDAO's liquid restaked ETH. All right, we got that going, and now I'm earning points, or more points than I already had before, for the Kelp airdrop and then for the EigenLayer airdrop. And EigenLayer, they already did round 1 of their airdrop, but there's going to be multiple future rounds. So any EigenLayer points that you're accumulating for liquid restaking or staking natively with EigenLayer are still going to count for future rounds of that airdrop. Now, in order to maximize my points for the Linea Surge campaign, I wanted to add at least 1 level of leverage, which will allow me to bridge these funds off and continue doing other things, but also keep earning points for the Linea campaign. And in order to do that, I have to use, I think, the Zero Lend platform. Even though this is not, in my opinion, an amazing airdrop qualifier itself, they are, as far as I can tell, one of the only platforms that's actually enabled lending and borrowing for the KelpDAO's liquid restaked ETH. So you can use this asset as collateral on Zero Lend, but only in isolation mode, meaning that this is the only asset you're using for collateral to borrow against. So you can't combine, for example, Kelp's ETH and then another asset and then borrow something against it. Now, theoretically, if I do this, I will be earning points for the future rounds of the Zero Lend airdrop. I'm not very bullish on Zero Lend, the platform itself. The token in their first round of the airdrop was kind of a flop, but it is at least one additional thing that I'm tacking on here. So technically it does count as another airdrop Lego. And then we've got the LXP points for Linea's campaign, and then also Turtle points. And this is another one, I've spoken about it previously in some of my other videos. The Turtle Club is just yet another airdrop Lego that might give you some points for things that you're already doing anyways, like what I'm about to do on Zero Lend. So if you provide liquidity on any of the platforms that are partners in the Turtle Club here, you earn points for this airdrop campaign as well. So Kelp is on the list, and then also Zero Lend is on the list. So that's a couple of extra sources of points that I could be earning for this. I recommend that you do actually go and sign up for the Turtle Club points program if you haven't already, because it kind of just runs in the background and gives you extra points on some stuff that you're probably already doing anyways. And then even if this ends up being worth a small amount when they drop their token, any additional money is solid. All right, so I'm gonna go ahead and supply the full amount of ETH that I have to the platform here. And I am gonna do one borrow loop against this. And one of the reasons why I'm doing this with KelpDAO's liquid restaked ETH is that they've already enabled unstaking on the Ethereum mainnet, which means there's a much lower risk of a depegging event. So for example, with Renzo's liquid restaked token, that has been depegged for like a month now because they don't have unstaking enabled. But since KelpDAO does have that, it makes it a safer bet. If there was any sort of slippage in the price relative to the peg, then people would just unstake via the Ethereum mainnet and then arb that slippage, so it would bring it back to peg. So that is why I feel safer doing a borrow and lending loop on KelpDAO's ETH here. And now I can actually borrow ETH against it. So let me go down here, click on the borrow button for ETH, and the APY on this is 20%, which is a little bit high. So the idea would be to hold this open for maybe a couple of months until I get one or two of these airdrops and then unwind the position. So I'm gonna borrow some ETH against this. Let's go ahead and confirm this transaction here. And then I'm going to take the ETH that I just borrowed back to KelpDAO, and I'm going to restake again. Not the max amount, 0.22. So this is adding leverage to the position, increasing the level of risk, of course, but also increasing my exposure to Krypto, Eigenlayer, and then to the Linea experience points campaign. And now that I've got some more Krypto ETH, I'm gonna go back over to Zero Lend, supply that to the platform. So hit max here and then approve this transaction. And then I'm going to, again, borrow some ETH against it, but I'm not going to keep looping it this time. I'm going to bridge it out and do another thing. So let me go ahead and complete this last borrow. And I don't want to borrow the theoretical max that I could. So I'm just going to borrow 0.15 ETH against this. And that is going to leave the health factor of this loan at 1.21 with the liquidation at below 1. Okay, so I'm actually done with Linea now. That's all that I wanted to do here. I've got my kelped out position, my Eigenlayer points, my Linea points, my Turtle points. Got lots of points going on here. And what I want to do next is to take the amount of ETH that I have left, which is slightly less than $500, I think. Yeah, $482 left in the wallet here. And I'm going to actually bridge that over to Solana. And then I'm going to hit a couple more high tier airdrop targets. But before I can bridge to Solana, I need to get that ETH into a bridgeable token, which would be USDC or USDT. So again, I'm going to use Jumper to swap between ETH and USDT on the Linea network. And I'm going to swap 0.15 ETH. I like to leave a minimum balance in my wallet on all these L2s just in case, you never know. All right, we can route this transaction through Odos as well and hit another airdrop Lego. Now, technically I could bridge my USDT over to Solana on the Jumper exchange, but to add yet another airdrop qualifier to this list here, to this strategy, I'm gonna take it over to dBridge and do that over there. Okay, so dBridge is only gonna allow me to bridge USDC to Solana. So I'm gonna have to actually go back over to Jumper and swap that USDT into USDC. Hopefully this doesn't get me marked as a Sybil for wash trading, but it is what it is. Okay, now I have my USDC on Linea. I can bridge that to Solana and have that come out as USDT or USDC. Let's just make it USDC for simplicity. And you need to paste in your Solana wallet address down here if you're using dBridge, FYI. So make sure that you've got the wallet address correct on the other end before you send the transaction. And this is gonna cost me about $1.14. It's gonna give me points for the dBridge airdrop or ICO, whatever you want to call it. dBridge rewards you with points exclusively based on the amount that you spend on transaction fees using this bridge. But it is actually a really fast bridge, so this should go through pretty quickly. Let's do this time only for the approval. And just like that, literally less than 5-10 seconds, I got my USDC on Solana and we are good to go. All right, so now that I have USDC on Solana, what I want to do is go over to the Jupiter exchange and I'm going to swap that into a couple of different tokens. Now, this is another airdrop that we're hitting. Jupiter did round one of their airdrop last year, or early this year rather, but they are going to have additional future rounds of the airdrop. So in order to qualify for Jupiter, you definitely want to do some swaps on the platform. You can do limit order swaps, you can do DCA swaps as well. And they also have perps trading on the platform that you can do, but I'm not going to get into that right now. So what I want to do with the amount of capital that I have is split it up between the Sol or Solana token and the INF liquid stake token from Sanctum. So in order to do this, I will actually open up a DCA order, and I want this DCA to go every 1 minute to purchase 50 USDC worth of Sol over 5 orders. So all I have to do is click Start DCA here and then confirm the transaction in the wallet. Then I'm going to go over to swap and I'm going to swap the rest instantly into the INF token. So 250 USDC into INF. Let's hit swap here and confirm the transaction. Now, FYI, if you're swapping into Infinity, there are potentially different rates available on different platforms. So on the Sanctum app itself, you can try swapping from Sol into Infinity. You might get a slightly better rate, but sometimes you actually get a better rate on Jupiter. It honestly really just depends. But I'm not too worried about slippage on a small transaction like this, so let's go ahead and confirm. Okay, great, that went through. So now I've added Jupiter to the list of airdrops hit. And what I'm planning to do next is to qualify for the Sanctum airdrop, but also the Meteora airdrop. I think these are both high priority airdrop targets within the Solana ecosystem. And I can use the same pool of capital to hit both of them at the same time. So the way this works is Sanctum has an airdrop campaign on right now where you get experience points for these little characters or pets they're called, and you level them up based on holding assets in the Solana ecosystem or using them in DeFi. So this right here is the pet for the INF token. And if I click on that, it says that I can earn experience points for this Sanctum pet by depositing into this liquidity pool on Meteora, the INF Sol DLMM pool on Meteora. So that is what I'm going to do. This is going to earn me points for the Sanctum airdrop, rank up my pet here, and it's also going to earn me fees from Meteora as well as points for the Meteora airdrop. So in order to access the pool, click on DLMM up here, search for INF, and select the pool with the most liquidity up here, INF and Sol. And by the way, if you haven't already signed up for the Sanctum airdrop, you need to actually do that, connect a wallet, sign a message, and if you want to use the referral code that I put down below, you will get a points boost on that as well. But once you've signed up for the Sanctum airdrop, you will actually start earning points for it, and that's when we can actually go over to Meteora with the assets that we've got and make the deposit into this liquidity pool. Now, another option you could do if you don't want to mess around with liquidity is to just swap all of the USDC into the INF token and then hold that in your wallet, or to get an additional airdrop, park it into Camino Finance. Now, the reason why I'm doing Meteora is because I think this is a much higher priority airdrop target than Camino Finance. And with Camino, you don't actually earn any fees or yield on it, but it's set and forget. It's definitely easier. So if you want to mess around with liquidity pools, you might have to come back here periodically and rebalance your position to make sure that you're still earning points for the Sanctum airdrop. So it's more active and comes with higher rewards, in my opinion. But if you want to just set and forget, then Camino Finance or MarginFi even are better options, because you can just swap all of the USD into the INF token and then park that somewhere else. Anyways, I'm going to make this deposit here with all of the INF I swapped into and an equivalent amount of Sol. Now, there's 3 different strategies you can choose for liquidity. I'm just going to use the spot strategy for simplicity. With Curve, I believe you might have to come back slightly more frequently to rebalance. So I just scroll down here, hit add liquidity, and confirm this transaction in the wallet. Okay, done. So my position is now live and earning fees and earning me points for this Sanctum airdrop. My Infinity pet is already ranking up from other stuff that I'm doing, but now I'm earning additional experience points from that deposit. And I'm also earning points for the Meteora Finance airdrop as well. Now, these 2 assets, INF and Sol, are correlated assets, so they shouldn't diverge in price over time unless there's another black swan depegging event like I was speaking about previously. However, you may still have to come back periodically, check on your liquidity, and rebalance it to keep it at 50-50, because as people utilize this pool here to swap either to or from the INF token, then the relative amounts of each change over time. And as that happens, the amount of INF you have relative to Sol or vice versa can shift. So I would recommend coming back at least weekly, check on your position, and rebalance it if you need to. You only earn points for the Sanctum airdrop based on the amount of INF that you have in the pool. So if it ends up over a period of time where most of the INF has been converted into Sol through swaps on this platform, then you would want to withdraw that, rebalance it in order to make sure that you do keep approximately 15% of the value of this in the INF token. But yeah, I'm already earning fees. I can see that ticking up here, and this is a multi-airdrop qualifier. So that is the new multi-airdrop qualifying strategy. Now let's recap all of the airdrops that we hit. For starters, we hit the Jumper airdrop. We moved a bunch of volume through this, so that is a solid qualifier there. Then we bridged to Aptos using Liquid Swap, so that's 2 and 3, Aptos and Liquid Swap or Pontum network. And also that routed through layer 0, so that's number 4. We did some swapping to increase our volume. Then we hit Aries market as well, so that is number 5. And we bridged back out through the Aptos bridge, which is just another Aptos in layer 0, so that doesn't add any additional ones to it. After that though, we hit Jumper and routed a transaction through Odos, so that is number 6. Then we bridged using Orbiter Finance to Mantle, which is number 7, and then Mantle itself could be number 8. We also used the gas.zip refuel feature, but we've already interacted with layer 0, so that's not adding another new one. It's just increasing the number of transactions for layer 0. After that, we did some more swapping on ODOs for USDE, so Athena is number 9. Then we tried to go over to Intent X. Theoretically, that would have been number 10. Unfortunately, that didn't work. I did make a small deposit of USDE on Init Capital though, so I guess that's number 11 or the bonus number 10. Then we bridged via the Al2 Finance bridge to Linea, so that's Al2 number 12 and Linea number 13. We signed up for the Linea surge. We went over to KelpDAO, and then we restaked the ETH for KelpDAO's liquid restaked ETH. So that is number 14 and 15, KelpDAO and Eigenlayer. Then we went over to layer 0 and we hit the layer 0 airdrop, so technically number 16, although I'm not super bullish on it. And we also signed up for the Turtle Points campaign, so that is number 17. We did some looping and leverage, which just increased our exposure to all of the above. And then we used Jumper once again to do some swaps. And then we used dBridge Finance, so number 18, to bridge over to Solana. After that, we hit the Jupiter airdrop for number 19 with a bunch of swaps and DCAing. And then we went over, signed up for the Sanctum airdrop, so that is number 20. And then finally, we hit the Meteora airdrop for number 21 by depositing into the liquidity pool. Or if you chose the set and forget option, you deposited maybe your INF tokens into Camino Finance or MarginFi, and that would be your 21. So that is the new multi-airdrop qualifying route. Hopefully you found this helpful as always. And again, please do your own research. There's a lot of risks associated with all of this, especially the looping and leverage parts of this. And you need to make sure you understand what you're doing before risking your capital. Thanks so much for watching and have a great day.